Financial markets in turmoil.
What are the root causes of the financial crisis?
The dollar losing value.
Heading for its biggest loss in nearly 3 decades.
Will Social Security even be there?
I don't know.
Buy or rent?
That's a very good question.
Interest rates.
I'm not so sure.
Where do you put your money?
I don't know.
Welcome to the show that answers your questions. This is Follow the Money Weekly with your host, economist, and best-selling author. Here's Jerry Robinson.
All right, friends, welcome to you all around the world. Welcome to Follow the Money Radio. So grateful to have you here along for the ride. We got a great show lined up for you today. Today's episode is entitled The Basics of Swing Trading. The Basics of Swing Trading. This is episode number 431. And as you might guess, today we're going to be diving into the world of swing trading and giving you lots of information that you need to get started as a new swing trader. You know, 2023 is a new year. We just went through a brutal year in 2022 where a lot of people got wiped out. A lot of people who had entered into the market back in 2020, they were attracted to the stock market in 2020 with all of the quantitative easing and everything going on from the Fed. But many of them were not, grounded. They weren't able to understand that what goes up must come down. And sure enough, 2022 was a wipeout year for many people, not just, newbies, but professionals and experts, were shocked at 2022. It's really been quite a shell shock to the whole system. And now as we enter 2023, there is some hope. You see some glimmers of hope as the market seems to be rebounding. And many people are, looking into the market and saying, maybe I want to get back in. Maybe I want to learn how to trade. We've been seeing that at least here at Follow the Money from our new members and hearing some of their comments. And so today we thought we would just dive into the topic of swing trading and cover, some of the basics of swing trading. We talk about some of the key strategies for success. And we'll also keep this podcast episode light and easy to follow because we know that we're really, focused upon that new trader who is looking at the market and saying, I might want to make swing trading or some form of trading a new income stream for myself or my family in 2023. So if you're new to trading or just looking to get a better understanding of swing trading, then this episode is perfect for you. We'll start by talking about what swing trading is. We'll get into some definitions, and we'll also talk about, why it might be a good fit for you as a new trader. Swing trading is different from other types of trading. It's not position trading. It's not long-term investing. So we'll talk about what you can expect as you get started. So sit back and relax as we get started here. And we want to help you become a successful swing trader. And we provide tools to our members here at Follow the Money to help them succeed as swing traders and position traders. But today, as I mentioned, all about swing trading. So let's talk about swing trading. I think that swing trading is an important option for new traders to know about for a few reasons. So first of all, swing trading allows you to get started with trading without having to commit to a long-term investment strategy. So by holding positions for just a few days or a few weeks, you can enter and exit the market in a relatively quick manner and also reduce your overall risk. Now, 2022 was a great year for traders, but it was a tough year for investors because they saw, if they're buying and holding, well, they saw their prices going down and down and down. Well, investors can take advantage of that by dollar cost averaging in. But with swing traders, obviously the swing trader gets in and out of the market in a rapid fashion. So he's not like a day trader, but he is able to take advantage and exploit opportunities as they arise. Another reason why I think swing trading is a good fit for new traders is because it can help them build their confidence. By focusing upon short-term trades, you can learn the basics of trading and develop your chops and your skills, without having to be concerned about the long-term ups and downs of the market. And this can be a great way to get a feel for the market, see what works for you before you move on into some more advanced trading strategies. Also, swing trading can provide you with a sense of control over your trading capital, over your investments. By using technical analysis, by focusing upon specific rules on entry and exit points, you can make informed trades based upon your own research, based upon your own analysis. And when you do that, it helps you feel more confident in your trading decisions, and it allows you to build a profitable trading strategy over time. Okay, so with those kind of reasons stated up front, let's just start by breaking down what exactly swing trading is. So swing trading is a form of trading that involves holding a position for a few days up to a few weeks. We often teach here that the goal for a swing trader is to earn between 1 and 10% within 1 to 10 days. So that's a pretty good idea of what a swing trader can do. Sometimes you'll make 3 or 4% in a few days. Sometimes you might earn more. Sometimes you'll make more than 10%, and sometimes you'll lose on a trade. It really all boils down to your tactics, to your strategy. But I think that's a pretty good overall view of what swing trading can do, is that you're looking for these short-term gains. They're not massive. You're not looking for 100% gains. Maybe if you're looking at options, you might see larger gains. But when you're talking about just trading stocks or cryptos unleveraged and without using options, then 1 to 10% within 1 to 10 days is a pretty reasonable expectation. And quite frankly, that's very, very good when you think about it. Especially considering that people will put money into a bank and leave it there for a year and maybe earn less than 3 or 4%, whereas you're taking capital and going out and trading and earning 1 to 10% within 1 to 10 days on each trade. That can be pretty powerful. So so it's different from day trading, though. So if you're thinking of day trading when I'm talking about swing trading, don't, because day trading is where you're in and out of the market in the same day. That's not what a swing trader does. And it's also different from long-term buy and hold investing, where you buy a position and then you hold it for a long time, buy and hold. You may hold it for months, you may hold it for years. It's also not position trading, which is kind of between buy and hold investing and swing trading, where you're holding for a period of months. And you often, can earn more because the longer you're in the market in a trend, you can make more from that trend if it goes in your direction. But swing trading is not day trading. It's not position trading. It's not buy and hold investing. It's a short-term form of trading that means that you're in the market for a few days, maybe a few weeks. Okay. So why would you swing trade? Well, it's good for new traders who are looking for a balance between, the very intense and fast-paced nature of day trading and the long-term investment approach of buy and hold. So by getting into the market for a few days up to a few weeks, you're able to take advantage of short-term price swings in the market. Now, you don't need to be an expert, to get started in swing trading. You're going to use technical analysis tools. You'll certainly be using charts. You'll be using moving averages and trend lines to help you identify trends and to make those informed trades. But as you get more comfortable as a swing trader, you start to develop your own style, right? You begin to develop your own strategy, your own niche. And developing a trading niche is really outside of the realm of today's podcast. But I've talked about developing a trading niche in the past on many different podcast episodes. And that's so valuable for you to have your own, I don't know, the lack of a better word, it's just your own shtick, your own approach, your own strategy that you use. And I think that's very powerful. We often see the people who fail in trading are those who don't really seem to have their own niche, and they don't really do any kind of in-depth analysis in any one area. So what happens is they literally just trade anything that moves. And while that can seem to be smart, it actually is not, because you are at the mercy of many other factors that are unknown at that point. So you really want to drill down and focus on your own niche if you want to be a successful trader over the long term. Now, let's talk about preparing to trade. So maybe you've never traded before in your life, and let's just go through some of the steps that you would need to kind of get ready for this. And so the first step, of course, in preparing to trade is to do lots of research, right? To educate yourself. And this is crucial. I mean, you must trust me on this point. You don't want to jump into trading blindly. You don't want to start trading money before you know what you're doing, right? So we always teach the importance of paper trading or trading. And what I mean by paper trading is by trading on paper. Just come up with your own strategy. Come up with a strategy that you like. Maybe you've read a book. You think, okay, this sounds like a good strategy, or this other strategy, and then test that strategy. Don't use real money. Just imagine that you're trading it. See if it works. See if it makes sense to you. That's very, very powerful. Before you ever, begin to go any further, you want to test your strategies. You don't want to put real money at risk with a strategy that you've never tested. So, and of course, paper trading can really take a lot of the emotion out of it, which is not great, because when you put real money at in the market at work, you're going to feel things that you don't when you paper trade. So realize that paper trading is deficient in many ways, in the fact that it doesn't really expose you to the emotions that you're going to feel when you actually put real money at risk. But nonetheless, paper trading does have value because it allows you to test out a strategy before you put real money to work. So, as I mentioned, one of the very first steps is education and research. So what should you research? People say, well, you need to research. Well, what do you research? Well, you want to start, by reading good books. I've mentioned many good trading books over the years. One of my favorites is by Nicholas Darvis. His book, How I Made $2 Million in the Stock Market. Totally a gimmicky title, kind of a clickbait title. But when you actually read the book, you'll discover that it's filled with a lot of great wisdom. I also like William J. O'Neill's book, How to Make Money in Stocks. I think he has a great book there. There's lots of other books as well. I've talked about those in the past. But reading books, listening to podcasts like this one and others that encourage you to do more digging into maybe your particular trading niche, or learning more about how the market works. Watching videos, of course, to learn more about swing trading and how it works. So you want to look into different trading strategies like trend following and even mean reversion, and see which ones really resonate with you. Don't be afraid to reach out to experienced traders for advice and guidance. I think that's really crucial, is to have some sort of mentor or some sort of person in your life who you can bounce ideas off of, who have experience. When I first got started, I had somebody who didn't really know what he was doing, but it was better than nothing. He was a new trader, and he was kind of stumbling around. He was making money. It was the late *90s, so I think most people could throw a dart. I think they actually had Wall Street Journal had a monkey throw a dart at a list of stocks, and ended up making more money than the average hedge fund manager back then. I think that happened back in the *90s. But my point is that anybody could really kind of make money in that environment because everything was going up. Well, you want to find somebody, who you can bounce ideas off of, and ideally that they have more experience than you. That's obvious. So you want to find a mentor of some kind. I think it's very powerful. If you really want to be a trader, if you really want to do that long term, then you've got to think about it that way. Many people approach trading and they're like, well, I want to do this, but they don't realize that it's a business like any other business, and so you've got to treat it like that. Don't be afraid to reach out to more experienced traders, and don't be ashamed to not know something. I think that's very key. If you want to be a successful swing trader, don't act like a know-it-all. Understand that you don't know things, and that's okay. That's the way it's supposed to be. That's the way everybody is when they're new at something. Obviously, you want to set up a brokerage account as well. So to start trading, you're going to need to open a brokerage account. So there's many online brokerages that offer trading services. There's a lot of cool ones that have different bells and whistles. I've used E-Trade, Fidelity, Schwab over the years. I'm very comfortable with those outfits. Plus, they have robust charting tools. They have robust research tools, and I think that's really great. And I would open up the brokerage account well before I began trading, so I could get very familiar with all of the tools offered by that brokerage. So, you can open up an E-Trade account or a Schwab account, I think often without any money. Maybe you got to put in a small amount. It all depends. They're all different, and they probably change their standards over time. But the point is that you want to open up that brokerage account and start really taking advantage of all the tools, all the education, all the resources that are there. That'll be a great way for you to begin to learn as you're thinking about trading. Another important part of preparation, of course, is to familiarize yourself with the tools that you will inevitably be using when you trade. So, and I'm talking specifically now about technical analysis tools. So if you're not familiar with technical analysis, when I say that, and you say, what is that? Well, that's definitely something you're going to want to learn. There's great books on technical analysis. There's wonderful resources out there. Plus, you'll find great items online that you can check out. But really what we're talking about with technical analysis are things like moving averages, trend lines, maybe even Bollinger Bands, right? Some of these different technical indicators that you can apply to a chart, and then you can use those tools to help you identify entry and exit points. Very, very powerful. And as I mentioned, when you open up a brokerage account, some of those actually have paper trading accounts that you can use. So you can say, look, I don't have any money I want to trade right now. I just want to use a paper trading account, and I want it, just to tell me how my strategy would work. That's a great way, to get started trading. And don't let anybody tell you that you have to put money in the market to learn. Yes, you do have to put your money out there eventually, but there's no reason why you can't test out strategies with a paper trading environment. I think it's very, very smart, as long as you realize that the emotions are going to be very different when you put real money on the line. So you've got to learn that trading psychology as well, and that can only be learned by putting money into the market. I also want to stress that when you're getting started, not only to paper trade, but also when you do actually begin to put money in, you want to start off very, very small, right? Some people have the opposite approach. They'll come in and they'll say, okay, so they often feel overconfident, and then they will put lots of money in, and they will start with a very large trading balance, and then they'll see it get whittled down, because that's the tuition that you pay on Wall Street to learn. You're going to lose money. Hey, all traders lose money. I mean, that's something that you just got to know from the very get-go, right? All traders lose money. The good traders lose less money than they make, right? And that's the whole goal, that you learn risk management. But my point is that when you're first getting started, you want to start out small amount of money, only trade what you can afford to lose, right? And that's very, very important. One of the saddest stories I saw early on whenever I was a trader was a friend of mine who was wanting to trade, and he took out quite a bit of a loan. He actually took out a second mortgage on his house to trade. And I told him that was not a good idea. I mean, I had done something similar. I had taken out a small cash advance on my credit card to get started. Terrible idea. I mean, I just can't even stress to you how dumb the idea. This was 25 years ago, and I was trying to make money. I was trying to figure to crack the nut on trading. And I took out a cash advance on my credit card. It was like $5,000 to get started, And of course, I had to pay 20 or 30%, whatever they charge you for cash advances. Don't ever do it. I'm telling you now, don't do a cash advance on your credit card to get trading capital. What a dumb idea that was. Well, anyway, I did get started, and that was the money that I got started with, because I was broke at the time. I didn't have a lot of extra cash to trade with. But looking back, I wish I wouldn't have done that, because it was really just a poor strategy. Well, anyway, I had a friend who took out a second mortgage, and he was hanging out with guys that were making good money trading, and people I didn't know. And I told him, I said, look, that's, I would, even though I was dumb enough to take out a cash advance on my credit card, I can tell you right now that that's a dumb idea to take out a second mortgage for trading. Well, he did lose quite a bit of money. He ended up being okay in the end. He actually worked it out. But he was devastated for a while. And I want to encourage you, don't be that guy. Don't be the guy who borrows money to trade, right? Don't do that. Make sure that you have cash that you can afford to lose, and it's not borrowed money, right? So very, very important. Now, as you become more comfortable with swing trading, of course, you can increase the amount of money that you're trading with. But I want to encourage you and pound it into your brain here. Start small. Very, very important. And also, when you're getting started too, I got to say this. One of the things we teach our members here at followthemoney.com is the importance of having patience. Right? It's very, very important to have patience when you're trading. The market can be very volatile, as many of us know, and it can take time for you to see consistent results. And you want to be very careful about allowing your emotions to influence your trade. So you want to stay focused upon a trading plan. And we're going to talk about that now. Talk about trading, because trading plans are very, very important. You got to have a trading strategy. You got to have a trading plan. And so, but before we talk about that, just, really just to sum that up is just to say, take your time, do your research, educate yourself, take advantage of every resource you can find, and don't be in a rush to get out there and trade. People often have this idea that if I don't trade now, then all the great opportunities will be gone. That's not the truth. I wish I would have known that 25 years ago. I wish I would have known that I didn't have to do it right then, because I've learned since that time that there's always a bull market somewhere. Especially with the advent of inverse ETFs and options. And you can short stocks, and you can, buy put options, and you can go long, you can go short. I mean, there's just so many different opportunities. There's ETFs, there's cryptos, there's commodities, there's currencies. I mean, you have so many different, ways to trade. So don't be in a rush. Don't be thinking to yourself, well, I've got to immediately trade now, and if I don't, all the deals will be gone. That is not the case. That's not the case. So there may be more ideal environments for particular types of trading, but overall, you're always going to have an opportunity. So don't rush into this. This is not something you want to rush into. You want to take your time, do your research, educate yourself, and then slowly proceed and start small as you get started in the world of trading. All right. So now you've done your research, you've educated yourself on swing trading, and now you're like, all right, I'm ready to get started, right? So you're ready to get started. So you got your brokerage account open, you've got your trading tools, you've read some books, you've listened to some podcasts, you've probably found a mentor now, and you're okay. You've got kind of a plan going, but now you don't really have a trading plan. So what you got to do now is you got to create a trading plan, and the trading plan is a very essential part of swing trading, of any kind of trading for that matter. But we're talking about swing trading, so it's very important for that, and this will help you keep focused upon your goals. So a trading plan should really include your trading strategy. It should include your objectives. What's your objective for trading? What's your goal? What are you trying to do? And risk management. What's your strategy for managing risk? How are you not going to lose all of this money that you're getting ready to put into the market? So you've got to have a plan. So let's just go through a little bit of what that plan might look like. So, some of the things that you might have in your plan. First of all, you need to know what type of swing trading strategy you want to use. Okay, so that's something that you're going to have to decide. It's not that you can't use different strategies in different times. You can think of strategies like tools in a tool bag. Sometimes you need a hammer. Sometimes you need a screwdriver. Sometimes you need a wrench. But the point is that what you want to do is you want to decide upon what you're going to be doing mainly. What's your main strategy when it comes to trading? So it could be trend following. That's what we do a lot here at Follow the Money. We teach trend trading. Mean reversion, breakout trading, or you could do some sort of combination of these. But the point is you got to make sure that your strategy is lined up properly with your goals and your objectives, right? And so that really kind of brings us to that idea of your goal. So what is your goal? What do you want to achieve with swing trading? Why are you doing it? That's a very important question. Why? Why am I doing this? If you're doing it to make more money so that you can pay off bills, or you can spend more time with your family, or you can supplement your income or quit that part-time job that you have so you could trade instead, that all makes sense. But you really want to know, are you trying to make a certain amount of money each month? Are you trying to supplement your income? Are you trying to replace your income? You've got to lay all that out ahead of time. So just like any other business, you've got to have a plan. And so make sure that your goals and your objectives are achievable. Otherwise, you're going to frustrate yourself. So you got to make sure that they're realistic. Also, this is where you also want to put into your plan your risk management strategy. So this is where the concept of stop losses becomes extremely important. Extremely important. We teach here at Follow the Money to never, ever, ever trade without a stop loss, right? It's just very important. Stop losses And if you're not familiar with those, you can learn more about those. But my point is that stop losses, we teach the importance of having one for each trade because it's how you manage your risk. And so otherwise, you're going to end up with large losses and you're going to destroy your capital, your trading capital balance. I mean, so you don't do that. So have a risk management plan in place in your trading plan. You also want to have some, exit rules and entry rules. When do you buy a stock? What's your strategy? When do you buy it? And when do you sell it? I've discovered that many people, after coaching thousands of traders over the years, that many traders are pretty good at eventually coming up with a great entry strategy, and that's actually probably one of the easier things that you can do. It takes time, of course, but you can eventually come up with a pretty good entry strategy. However, it's the exit strategy that oftentimes really messes with traders because you kind of end up in this place where the stock is going up or the ETF is going up and you're like, oh, it just keeps going up. And you want to let the winner run. You don't want to cut it short, but you got to say, well, where do I cut it? Where do I take my gains? And so you got to have a strategy for that. You got to make sure you have that clearly written down in your trading plan. And you don't want to veer from your trading plan. And if you do change your strategy, well, then you need to update your plan so that you're not violating your own plan, right? So entry and exit rules are very, very important. And then you've always got to remember, like I said, you can review your trading plan. You can adjust it as necessary. That's no big deal. The market's always changing, and so your trading plan might want to reflect those changes. But having a solid trading plan in place will help you stay focused. It'll help you stay disciplined. And I tell you what, it'll really make a big difference in your trading success over time if you have a trading plan. So I want to encourage you to do that. Now, we've talked about swing trading strategies. We talked about creating a trading plan. But, how do you actually approach the market? I mean, how do you actually analyze the market in a way that makes any sense? Well, what we would say here is that this is where the technical analysis is going to come into play. So technical analysis, as we said, this is the study of market data. It's the study of identifying patterns. It's the study of different technical indicators that you can use to help you make trades. Moving averages, like I pointed out, very, very key. We talked about moving averages many times on several podcast episodes. And different indicators as well. I mentioned Bollinger Bands earlier. You can use other types of indicators as well. There's so many. And you want to identify what these are. You want to find a good combination of technical analysis tools that you'll use, and then that'll really help you. Another one is fundamental analysis. So many traders say, well, I don't need to know fundamental analysis because I'm going to focus on technical. That's true, but here at Follow the Money, we actually have a kind of a combined approach of techno and fundamental analysis. So we kind of bring the two together. And fundamental analysis involves looking at, the corporate balance sheets. It looks at earnings and revenues and income statements, and all of that is very, very important. It's all backward-looking information. It's all past data, but it helps you determine whether a company is financially healthy. And you need that information. You don't want to fly blind and be investing in near bankrupt companies because they're setting up on the chart well. You want to make sure that the company is healthy, that you might be trading. Of course, you can use news and you can pay attention to economic data that comes out and all of that. I found that news, quite frankly, is not that helpful. I used to think that you had to trade with CNBC on, in the background, or Bloomberg TV, and I thought that was a really important thing. Over time, I've learned that as a swing trader and even as a part-time position trader today myself, I don't care really about the news. So, but the news is old. It's old. I mean, by the time it gets to the news, the market already knows. And so to me, the news is oftentimes a hindrance. At worst, it's a distraction. And so I would say that news, I would put that down the list as far as what's important. I would put fundamental and technical analysis, especially, up near the top of the list. Another thing that's very important too is market sentiment. So how investors are feeling. What's the overall sentiment in the market? And you can look at different things like trading volume to figure that out. Social media chatter is also a way to kind of track that. But look, in the end, it's going to take you a while to get your finger on the pulse as a new swing trader to figure out how the market is moving. And be patient with yourself. Just keep practicing and take your time. Remember, trading is kind of like learning to ride a bike. And once you learn how to ride a bike, you just really don't forget. But it may take a bit. It may take a minute. And so you've got to be patient with yourself. But once you learn how to ride a bike, well, then you're not ready to go mountain biking. You're just ready to ride on a flat trail, And so be patient with yourself, and then practice on that flat trail. And then maybe you're ready for, dirt biking, and then maybe you're ready for something else. And so just, be patient and don't try to force yourself to be something that you're not. Just slowly grow your education, slowly grow your understanding. What I would say is the pace of wisdom. Just kind of grow at that pace of wisdom, and over time, you're gonna succeed. You're gonna finally discover that if you practice and have patience and be patient with yourself, you're gonna find that trading is something that you can do. You may be thinking to yourself, I can't do this. Well, even you can do it if you practice and have patience with yourself, huh? So there it is. So that's simply how I would approach analyzing the market in a very quick way. Obviously, there's a lot more to it, but just for this brief podcast episode, it kind of gives you some good tips, some good ideas on how to achieve success with swing trading. All right, so we've come now probably the most important part of this podcast episode, and that is the topic of we would say psychology. Staying disciplined. So it may not seem like the most exciting topic. Many people don't think that trading psychology is that important. I found that it's probably the most important topic. People don't realize that when they go to trade for the first time, that they're bringing all of their emotions with them, and they won't realize this until they begin to feel the emotional roller coaster that is trading. And a lot of times, the things that are inside of you will come out, and you didn't know they were there. But when you begin to trade, you begin to realize, wow, I didn't realize that I have some issues, or maybe I have some emotional hangups, and you have to learn to deal with those, right? So trading kind of brings that out of you, and you've got to be ready for that. So you've really got to stay disciplined. You got to stick to your trading plan, right? Like I said, it's easy to get caught up in social media chatter. It's easy to get caught up in some sort of news story. It's easy to use all of these other things to cause you to change your plan. But that's often a recipe for disaster, because your trading plan is like your roadmap. It helps you stay on track. It helps you make the right decision. It's what you've learned over time, and that you're saying, okay, this is what I'm going to do. And so when you just deviate from that plan because of some random thing, oftentimes it can blow up, your trade. And so you want to focus on that plan, and you want to stay disciplined. Another thing you really want to avoid is emotional trading. Okay, this is a really bad idea. When you're a new swing trader, you may not realize that it's bad to trade when you're emotional. But oftentimes people will do this. They may have been, maybe an argument with a coworker or a spouse or whatever, and then they go to trade, and then they're kind of, they're kind of venting their emotions in the trading, and this is not a good idea whatsoever. So you don't ever want to make your trades based upon emotions. You certainly don't want to make them after you've had a big loss and you're feeling really bad about it. What we call revenge trading. Don't do that either, right? So if you're feeling overwhelmed, you're feeling stressed, just take a step back, close the computer, step away. Don't approach trading when you're emotional, and certainly keep your state of mind, in a disciplined state, so that you're able to succeed in trading and not get caught up in all the emotions that you're inevitably going to feel when it comes to trading. And so, of course, finally, we would say that over time, you're going to gain more experience as you begin to trade. You're going to gain more knowledge. And over time, your trading approach is just simply going to change. And that's great. That's a wonderful thing. That means that you are learning new things. You're learning new concepts, and you're learning better ways of doing things. So exactly how you learn them in the beginning and exactly what you know in the beginning is not going to be the same after you've been doing it for a year or 2 or 3. I mean, I can think back about how I've changed my own trading plan over the years, and it certainly looks very different from what it did, 20 years ago. So, I think that's the key. You got to stay open to change. You got to stay open to new information and being humble and willing to learn, and not thinking that you have all the answers and not trying to be right, but instead, just realizing that the point here is to make a good trade. And it's not, you don't have to be right. You just got to make a good trade. And if you're wrong, you've got to lick your wounds and realize where you went wrong and fix it, and not do it again. Try not to repeat your mistakes. I think there you have a really good summary of how it all works. And staying disciplined in swing trading is probably the biggest thing I could tell you that's so important. Success in trading takes time. It takes effort. You got to be disciplined. You got to have patience. You got to stick to your plan. But if you do, then you'll be on your way to a successful swing trading journey. It's Jerry Robinson here from Follow the Money Radio. Are you tired of feeling lost in the stock market and unsure how to make a profit? Look no further. FollowTheMoney.com is here to help you navigate the financial markets and to teach you how to prosper through our time-tested trading and investing strategies. Our team has years of experience in the financial markets, and we have developed our own proven trend trading system for identifying and capitalizing on market trends. When you become a member here at FollowTheMoney.com, you instantly become part of a global trading and investing community and unlock access to in-depth training and education, including video tutorials, live webinars, and exclusive market analysis tools, which includes our powerful Profit Tracker trend trading system. With our system, you'll be able to spot the next big trend and make informed investment and trading decisions that maximize your profits. Whether you're a seasoned trader or just starting out, our services will give you the tools and knowledge you need to succeed in the financial markets. Don't wait any longer to start your journey to financial freedom. Head over to followthemoney.com/join and enjoy a free 7-day trial of any of our membership plans completely risk-free with no obligation. Make 2023 the year that you start your path to trend trading and investing success. Head over to followthemoney.com/join and take a free 7-day trial today. All right, folks, so we have come to the end of today's episode here. Hope you found this episode informative and helpful in your journey to becoming a successful swing trader. We obviously couldn't include everything in this brief podcast, but if you want to learn more, we actually have a very cool swing trading course that we've created. It's an hour long. It's been one of our most popular resources, and it's on sale right now in our store for only $7. It's a very, very cheap. It's a whole course for $7. And, it's from somebody who's been teaching swing trading, and I've been a swing trader, for 20, 25 years. I mean, so it's pretty nuts how long I've been trading. It's hard to believe for me. But the point is that this course is only $7. It's in our store. So you just go to followthemoney.com/shop. And you'll find the $7 swing trading course. So if this is something that you're into, that'll really be helpful for you. And it'll save you a lot of the pain and avoid some of the big mistakes that I've made over the years. I jam-packed a lot of information into that swing trading course. So if that's something that, floats your boat, be sure to go check it out. Followthemoney.com/shop. And there you'll find the swing trading course. But to recap what we've talked about today, we've covered everything from understanding what swing trading is to getting started with it, analyzing the market, staying disciplined. And let's just remember a few key takeaways from this episode. So first and foremost, it's important to remember that swing trading is very different from other types of trading. It's very different from day trading. It's very different from position trading. So if you're familiar with those, you still got to learn quite a few things when it comes to swing trading. Second, it's crucial to research and educate yourself well before you ever put a dollar into the stock market as a trader. It's also very important for you to create a solid trading plan. You need to have a risk management plan in place. You need to know how you're not going to lose your capital, which is the most important thing, that you do not lose your money. Even though you're going to lose, you want to limit that. That's always the goal of a trader. A good trader knows that risk management is one of the most important aspects of his trading plan. Also, as we talked about, the importance of trading psychology, right? So you got to stay disciplined. You got to follow your plan. Don't get caught up in emotions when you're trading, and don't be afraid to refine your plan over time. It's okay, because you're going to learn more, and as you do, you want to improve your plan and then improve your trade. Well, I hope this podcast episode was helpful for you. I know if you're a brand new swing trader or aspiring new swing trader, I'm sure that it is. And if you have any questions for us, always feel free to reach out to us. You can find us online at followthemoney.com. Well, friends, that brings us to the end of today's broadcast. And as always, I'd like to leave you with a final word, this time from a very famous trader named Victor Sperandio, also known as Trader Vic, when he said, "Successful trading is more about discipline and less about intelligence." This is a counterintuitive kind of idea when you think about it. But the truth is, and I can testify to this after coaching many, many people, I found that those who are very intelligent, those who are highly intelligent, well-educated, that can often work against them when they're trading because they tend to overanalyze, or they are worried about being right or wrong. And in reality, it's not about those things. It's not about emotion. It's not about pride. It's not about how much you know, but it's instead really more about how well you can control yourself, how disciplined you are, how much patience you have, and how much willingness you have to adapt and evolve as the market evolves. And I would add to remember most of all that the journey to successful trading is not a sprint. It's a marathon. It takes time. It takes effort, continuous learning to become a successful trader. But with dedication and a solid plan, you can do it. Anything is possible. So to all of our listeners, we encourage you to keep learning, keep growing, and most importantly, keep moving forward. With every trade, you'll get closer to your goals and become a more confident and successful trader. And that's just something to think about. Remember, friends, when you want the truth about the global economy, just follow the money. Have a safe and prosperous week, and we'll see you right back here next time. Till then, God bless.
Contained on the Follow the Money podcast is strictly for informational and educational purposes. It should not be construed as specific investment advice. The views and opinions of our guests and sponsors, including Tom Cloud, are their own and do not necessarily represent the views of FTMDaily.com or Robinson Media Group, LLC. Jerry Robinson does hold an insurance license and at times may offer consulting on life insurance and fixed retirement income products. Follow-up, individualized responses to email or phone requests that involve the rendering of personalized investment advice for compensation will not be made absent compliance with state investment advisor registration requirements or an applicable exemption or exclusion and applicable insurance regulations. Past performance is not indicative of future results. You should be aware of the real risk of loss in following any strategy or investment discussed on the podcast. Remember, never do your financial planning through podcast or radio. It's your money. Be wise. Do your due diligence and always consult